back in the saddle. Good morning, everybody. Welcome to the morning show on Stock Market TV. Spencer and JC, Steve with you as always. Alfonso whipping up charts for us behind the scenes. Great show for you today. We got Eddie Elfenbein. He is our guest. He will be joining us at 9. It is Tuesday. We may or may not have Patrick Duno on the show from the chart report. That'll be later on. We got you here, and the chat has been active this morning. Good morning, everyone. You guys were here early. That's all I have to say. Smash the like. Let's run my intro and bring the boys on.
Hey now. How was your weekend there, Mr. Strazza? 3-day weekend. How many holes of golf did you get in?
How many holes is the only question I ask myself on a 3-day weekend. Only 18.
Wow.
18.
I would have taken the over. What happened? You hurt yourself?
It was the busiest day on the golf course yesterday.
Stop it.
Yeah, it's crazy. It wasn't fun.
Well, I mean, it's January, so all these people from the north are not in the north or don't want to be. So there's that. And, it's one of those like holidays where like some people have off, some don't. So it works,
A lot of football this weekend, though.
A lot of football. A lot of football. A lot of disappointments in many areas around the country.
Yeah, you're not alone. You're not alone. Actually, the Dolphins weren't as bad as some of the other ones,
Listen, it's officially basketball season. All right. And for Miami fans, basketball season goes into the summer. Best part of the Knicks season's coming up in a couple of weeks when pitchers and catchers report. Best part of the Knicks season every year. It's tradition around here. So kudos to you guys. I know you're excited.
I just got to say, Eagles and Cowboys out here doing what they tend to do this time of year, making Giants fans.
How happy does that make you?
Putting a big smile on Giants fans' faces this weekend.
That is pathetic. That is very sad state. All right, so I think that we should talk about the markets. What do you think there, Mr. Spencer?
Sure.
Get it, baby. All right, let's quickly talk about what's happening. Not much this morning with Dow futures down 60 points, basically flat. S&P futures down 13 handles, about 30 basis points. NASDAQ futures down 30 basis points as well, about 50 handles. Look at 30-year futures down 0.5% here, with the Qs down 1/3%, continuing to move together. I want to point that out. Gold down 40 bips, pretty flat. Silver flat. Copper up 1%, crude oil up 50 basis points. Natural gas, the widowmaker, continuing to make widows left and right, down 10% to start the week as the dollar is inching higher. Something to monitor that we'll certainly discuss. Volatility inching higher, approaching 14 there for the volatility index, and yields inching higher just around 4%. And then I think it's important to discuss what's happening in the old funny money. Bitcoin up 1% today, 43,000 or so after a little correction. Sell the news sort of event. And Ethereum up 1% as well, up towards above 2,500, looking stronger than Bitcoin overall. And then finally, the old Solana still holding under 100, consolidating in what appears to be a healthy, digestion after a monster move. And that is the state of the markets. What do you think about that, Mr. Strazza?
It was a quiet weekend for cryptos, too. Sleepy weekend. No movement.
A lot of the discourse that I saw was just all about what had happened on Thursday and Friday and the trading volumes from the ETFs and the AUMs and the
what happened?
Just a lot of analysis of the first 2 days with all the ETFs, right? And and who sort of won the week, so to speak, and how much volume did, I think iBit was the big winner, the BlackRock's.
I was just going to say, let me know if it becomes a situation where BlackRock isn't the obvious winner, because if that starts to happen, maybe I care. But I think most people are going into this with the assumption BlackRock will ultimately win in a big way.
The crazy thing is that they don't even have the lowest fee. They're being undercut, but of course it's BlackRock. So
if we're talking about 0 to 0.2%, though, I don't know.
Yeah.
I don't listen. Here's the thing about investing in Bitcoin, right? We talk about the moves that you get from these crypto assets in bull markets. We're not talking about 10% or 100%. We're talking about thousands of percents. No one is going to look back at the end of a bull market cycle and say it was the fees. The fees really did me in, right? Like you're not, especially.
It's like the cost of carry on a short position.
I hope not.
You know what I mean? Like, are you not going to enter a short position where you're paying, let's just say 8% cost of carry on an annualized basis? So depending on how you hold it, you could only be paying less than 1%. If you're not going to if you're shorting a stock, you're probably looking for more than 1%. Right. And if you are not able to make that, to avoid the trade altogether because you don't want to pay the carrying cost, like to me, that doesn't make sense. So I'm with Strazza on this one.
And that's not to say the fees are not important. Like we've all seen the studies. Meb does a great job on this. Of course, like over time, that stuff can really add up and make a difference. And you could look back and say, oh, I could have saved a couple thousand here, a couple thousand there. But the risk reward game that you're playing with Bitcoin, I think 20 basis points, we're talking way too much about it.
Yep.
Yeah. Okay. I want to talk about a couple of charts to stand out. Let's talk about the S&P 500 and technology. So technology now almost 30% of the S&P 500. It's actually up to 29.8% of the S&P 500, making new all-time highs. S&P 500 also making new all-time highs on a weekly closing basis. You think they're vulnerable to correct here, or is this an indicator that it's up and to the right?
I don't look at this and think vulnerable.
So you think these are legit breakouts?
Yeah, I think we got to watch them. I think they could be. I don't even think that. I think it's almost too late to be a false start.
Okay. So you're leaning toward this being a legit breakout in technology, which would suggest the S&P 500 would follow, because the bet is not the one on top goes higher and the one on the bottom doesn't follow, right? You're not going to bet that.
Yeah. And God forbid if Apple ever gets its act together, S&P 500 is definitely breaking out.
Why don't you go to the next one there, Spencer? Tell me, do you feel the same way about this one?
Not as much, but not as much.
Tell me why.
This is I think the Nikkei peaked in 1989, early 1990. This breakout of this base in Nikkei is like 34 years in the making. Don't check my math, but I think that's pretty right. It can't be a bad thing, right, for global equities or risk assets around the world if one of the largest developed markets in the world is breaking out of a base that took 3 decades to complete. So not a bad thing, but I wouldn't go running and looking at a Nikkei. I would give you like DAX or something, because if you overlay DAX.
Hold on. The high is just under 39,000.
When was
Nikkei's under 36.
It was early 90s or late 80s?
It was 89, bro. So you got another 10% of upside at least before you even get to those former all-time highs, right?
Yeah. I mean, it's going.
And you don't think the Nikkei is going to appreciate those 10%? Or you do?
Yeah, it's going there for sure.
So if the Nikkei is going up 10% from here, what's the S&P doing in that environment? Is it going lower?
I don't know. Asia's weird. Even look at Asia right now. They're all moving in literally completely different directions. Right? You got Hong Kong, China making new lows. They look terrible. Again here this morning. Look at the way EM is looking like it's going to open here today. Complete disaster. And then Japan is like up every day, complete like nosebleed of a breakout here.
There's also currency implications of what's happening out there with the yen.
With the yuan too.
Are you talking about China?
Yeah.
Yes.
Cool.
China
I don't know. Don't you think developed Europe is a better information gauge for the United States equity
well,
market?
first of all, I wouldn't put Japan and China in the same category.
No, I wouldn't either. You're right.
So I would say both of those are unique situations, but unique to each other as well.
Yeah.
Right? Unique situations, agreed, but unique to each other as well. So I'll keep that and I'll focus on that. What about staples relative? Go to chart 5 there, Spencer. Staples relative. This is the one for me. Spencer Israel. Notice how this particular line was going down all of last year. You know why that was the case is because we were in a raging bull market and there was no need for investors to be in canned goods and cigarettes and booze. There's no need for staples.
It was raging.
I'm confused by the x-axis, but yes, yeah. For most of last year,
x-axis is those are years.
That's time.
Time.
No, I know, but 2024. So okay, so when does the line end? Is that last week?
Yeah. Yes. Correct.
Okay.
This is real. This is real time. This is updated.
Okay.
Notice the lows in late 21 going into 22. Do you remember what happened in late 21 going into 22? What happened, Spencer?
Ooh, me.
In like October-ish.
Listen, teachers, Pat Strazza. Let Spencer Israel have his turn.
In late 21, that was when the list of 52-week highs peaked. Am I right?
No.
Mid 21, Spencer.
Mid 21.
February 21. No. The end of 2021 is when the S&P 500, the NASDAQ, and the Dow all peaked.
That was when they all, the indexes, right?
The indexes all peaked and started to go down. And this line started to go up. I can assure you that is not a coincidence. So I'm looking at this 15.4, 15.5 level just on the y-axis, which would put us convincingly back above those former lows. And that is likely happening in an environment where there's a reason why investors are fleeing to the safety of consumer staples. And that reason is probably not because stocks are going up so aggressively. Why don't you take a look at slide 6 here so we can see what staples have been doing.
How important is it though, JC? Is it as simple as you can just, I wonder if we can just flip this ratio, staples ratio on its head, SPY XLP, overlay it with SPY. They both break out together or they both fail together. Is it that simple?
Yeah, most likely. But I think my bigger point here, go back to the other one, Spencer. My bigger point here is that relative to discretionaries, staples look better than they do relative to the S&P.
Yeah, let me check the equal weight quick.
Isn't this also like a rate story to some extent? Because who needs defensive stocks when you can get 4 or 5%?
No. The answer is no.
Like who needs dividends when you can get no?
Doesn't matter.
We don't know.
We don't. Well, obviously we don't know, but the market.
That's what we were saying a few months ago, right?
No. That's what we were asking a few months ago, and the market convincingly answered that question. Okay. No.
And explain why you say that.
The argument. So bonds were getting the shit kicked out of them, right? Mm-hmm. We all remember. During that environment where bonds are getting the shit kicked out of them, utilities and REITs are also doing that, right? Consumer staples in that environment were also underperforming and selling off. So the question was, are those consumer staples selling off as a sympathy selling for what's happening in things like utilities and REITs and that more defensive tilt? They're getting that sympathy selling, right? Or my argument was at the time, are consumer staples underperforming because this is a bull market and the market doesn't need to be flowing into consumer staples? What's happening with utilities and REITs is a bond situation, not a risk-off situation. And I didn't know, but that was my suspicion because we have so much data historically that would indicate that, of course. So my suspicion was that was the case. It was not a bond thing. As it turns out, that was actually very correct, right? Bonds bounced eventually, and utilities and REITs did their thing, and consumer staples continue to struggle, right? So that whole bond thing with the staples, we've seen no evidence of that being true at all. We've questioned it several times along the way. I've questioned it myself because I don't have all the answers. I have my guess and my suspicion, and we could weigh all the evidence, but we don't know. So those were the questions that we were asking, and the market answered that convincingly. So no, I don't think that the staple situation is a bond thing. I think it's a risk off. It's a risk on, risk off thing. How'd I do? Is that good?
Yeah, I'm okay with it. You know, and what about utilities? Because I remember a time when we used to overlay like SPY XLU with the 10-year. We don't do that anymore.
Well, the relationships between the stock market and the bond market have shifted since we used to do those things.
Okay.
Right?
Yeah.
I'm not saying that we can't, but we just need to be responsible with what we are deciphering from that information. Right?
Agreed.
Think about how many bond relationships are different now. Regional banks, REITs, copper, gold, right? We used to look at a lot of these things for interest rates, and we don't do any of that these days.
You know what keeps working though? Well said. You know what keeps working? Looking overseas at the bond markets in developed Europe. Keeps working.
So in other words, what's happening in US rates is really just a function of what's happening in rates around the world.
They have to stay in line, right?
They don't have to do anything.
Well, they tend to stay in line because there's ARBs there. The market keeps them in line. So, yeah, they tend to follow each other pretty well.
JC, wouldn't your point about the staples, wouldn't this exercise be better suited to look at the equal weight version? Since it's
we do both.
You can see something similar.
Okay.
Yeah, probably yes, but
yeah.
Spencer,
what I think gets forgotten is that consumer staples are heavily weighted towards their largest components also.
Yeah, no, that's what I'm saying.
No, right, but they're both, right? So discretionaries and they're both drunk, right? So it's like it's a fair fight, is my point. But when you look at
I was talking about the last slide. Sorry, the XLP versus the SPY. That's what I was thinking about when I said that. But yeah, okay, you're right about the XLY. Yes, they're both top heavy.
You're going to see the same thing though. Like if you do RSPS, RSP, again, it looks exactly the same. Literally, go overlay them. It's right there, testing those lows from November of 2021. It's the same chart.
Okay. Yeah, I mean, you got 14% Procter & Gamble, 12% Costco.
So it's amazing that they still look so similar.
9% Coke, 9% Pepsi. That's almost half the fund right there in four
Listen,
stocks.
no, and you're right. Like from an information standpoint, when we're just analyzing equal weight over cap weight as a general rule, I think is fair. Yeah.
Cool.
No.
For me.
Glad
you think that just general blanketing statement that an equal weight comparison is more important and more valid than a cap weighted comparison?
Yes, right. Because I'm looking at the internals of those groups, right? So I want something that gives me breadth when I'm analyzing at an index level, right? I don't want something that's dominated by two names. If I'm looking at what? If I'm looking at, XLK SPY for a read on where S&P 500 is going to go, I want the cap weight. It's what are your goals? What are your objectives? What are you trying to do with the information? If I want to know about like what a group of stocks is doing, I want it equal weighted every time.
No. We live in a cap weighted world, Strazza. I hate to break it to you.
You're missing it. A lot of our smart friends would agree with me. We've had Mark Newton.
I don't give a shit.
Having conversations.
I don't give a damn what any of our friends say. I don't give a damn. I'm telling you that we live in a cap weighted world.
Right. So I'm talking about if you're looking for a read on where the indexes are going because they are cap weighted, sure. Look at the spiders. But if you want to talk about the health of the market, right, or where the value line is going, I want to look at an equal weight index.
Yeah, I don't buy that. I think there's a time and a place. I think the answer. Hold on. I think the answer is what our answer always is that we do both.
And we do both. I'm saying
we do both. That's my point. But I'm not going to just blanket statement say that the equally weighted comparison is going to have more weight to our conclusion than the cap weighted. No.
I like general rules, so I'm just throwing that out as a general rule.
That's bullshit. No. Also, like when we look at different countries, do we look at the countries in their own local currencies or we look at them priced in US dollars?
Both.
The answer is we do both. So which one would you argue is more important?
Are you investing in it? Is it for investing? Are you looking for a vehicle? Then you want to do it in USD, right? Because you're going to have to take on that currency risk. If you're looking for what foreign
And me, because I live in
buy,
America. What if I live in Indonesia?
talking about people who live here and our clients. So for us,
Okay,
I don't live in
we
Indonesia.
have a very small population here in America. We have like 350 million people. It's tiny.
The people that we tend to serve with our research live here and transact in US dollars. So I like to speak to them in US dollars.
We've
Also,
got some friends. We got some friends that live in Zloty. You know, we do.
But if you wanted to know about the health of the broader international equity market, go look at the local indexes. Sure.
So to sum this all up, JC, it has an equal weight rating on equal weight versus cap weight. That just sums it up right there. I think.
I don't know that that's true either. I don't know that that's true.
I disagree with what both of us are saying.
I don't know. I don't necessarily know. I think that there's a time and a place.
Okay.
I wouldn't blanket one is better than the other. I wouldn't split it down the middle either.
Fine.
Let's see.
But I would say Spencer's closer than Strazza. It's definitely closer to the middle. I would argue I probably skew cap weighted is more important.
Okay, so the title of the show was I stole from you, JC, which is 3 reasons to be bearish. You got one of them, right? Which was
what?
The staples. Right?
Well, they haven't broken out yet, relative.
Right. What were the other 2?
Dollar.
Okay.
Go to slide 8. We said coming into the year, if the dollar's above 102, that's probably not great for equities. I would take it one step further. If the dollar's above 102.5, things are getting worse for equities. How do you feel about that, Strazza? Am I getting cute?
You're giving me a 50-cent range here? 2 quarters.
My question is, am I getting too cute? Or do you think these levels are legit?
You said above 102.50 headwind, below 102 tailwind?
No.
Oh.
Above 102, things probably aren't great for stocks. Above 102.5, things are worse.
It's a messy chart at this point. I want it below those pivot lows with follow through. Below the price.
Below 102.
Yeah. And then more.
Below 102 is very bullish for equities, in my opinion. See or no?
I want to see confirmation. I want to see the pivot lows get taken out. I want to see the prior cycle highs get taken out. I want to draw that big, pretty chart of the dollar breaking out of that base and then failing, rolling back into the box. Then I'll be like, okay, yeah. Then it'll feel more like it did back in October, November, December of 2022.
Throw small caps and the Nazi. What did we say? 400 on the Qs, 200 on the Russell 2000. See or no?
Yeah, and you know what else we were saying? Look out for small caps, and you just have to be patient because it seems like a lot of people want this small cap thing to work. I'm getting more and more skeptical by the day. Fizzled out real quick here. You wouldn't think that these charts resolve in different directions, but don't be shocked if small caps continue to take their sweet time, particularly the Russell 2000. I'm starting to really dislike the Russell 2000 as a small cap index. I don't know how well it represents the entire group, but the fact that this base is still basing, it's getting kind of crazy. And this has been a sideways market for a very long time now.
Yeah, you look at small cap industrials making new all-time highs. You look at small cap technologies acted really well too. It doesn't look like the Russell 2000. It looks different. But let's also remember what's in the Russell 2000. Let's remember, as investors, we don't really care what Strazza likes or doesn't like, right? It's more about a function of what it is. And you've got, what is it, 206 in the Russell 2000, so 2,000 stocks, give or take. You got 260 biotechs and another 250, 260 financials.
Did everybody see
That's
Jensen
a lot.
Wong? Everybody see Jensen Wong's comments on the biotech industry and how
He played for the Yankees?
No.
No.
Why is Jensen Wong commenting on biotech?
Who is this person?
It's all related.
Who is Jensen Wong?
He's the CEO of NVIDIA.
He talked about
Kind of a big deal.
I'm gonna find it. It's going around, guys. It's going around.
Well, it's not coming around where I live. Tell me what did this guy say?
Because he was speaking at the JP Morgan conference last week. Okay, that makes sense.
And this is a biotech conference, right?
This is like the healthcare conference. This is the big one every year where like a shit ton of data gets presented, and is probably the most influential thing on the calendar for healthcare.
Yeah, here, let me. So basically, watch out for the impending biotech boom. Blah 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 blah. He's just talking about this new tech revolution that we are in the very early innings of now. And he said the thing that's going to be impacted the most, and we'll look back at and say, wow, whatever, 5-10 years from now, is biotech is going to blow up and actually start curing things. So that's exciting.
Cool.
Yeah.
I'm into that. But again, we've talked about the idiosyncratic risk of biotech so much that IBB or XBI is hard to get excited about. You're going to have to, go a little deeper than the indexes probably.
Buy the genomic stocks. Those are the ones that he's talking about too. It's a new business model. It's a data-driven model that technology is improving in a rapid and very, very meaningful way. They basically have data archives, and then they're just matching things together and coming up with cures. And they're scalable businesses in a way that biotechs have never been scalable, right? They work on one drug forever, get it across the finish line, and then say, what do we do next? These are scalable models where they're using like machine learning and AI, scanning through these, monstrous databases and basically matching cures or treatments with genetic whatever characteristics.
Mm-hmm.
It's very cool. It's fascinating too.
How's that ARC-G doing?
ARC-G for the win all day.
Okay. Wow. How is
ARC-G for the win all day. I mean,
how is ARC-G doing?
Whoever's in it is not winning.
It looks the same. It looks the same as the other ones.
It's the biotech risk curve. Shout out Brian G. The biotech risk curve, right? So in bear markets, yes, genomics are going to get hit worse than any of these industry groups. In bull markets, they should do the best.
How do they all look identical?
What?
I don't know that I buy that. I don't buy that at all.
All these ARC funds.
I think that's
wrong.
I'll do some work on it. I think it's right. It's got to be right.
In bull markets, biotech should lead.
Bios and medtech, so medical devices and software.
They're pretty risk on.
Yeah, so why wouldn't they lead in the bull market? You're out here.
Well, medical devices, medtech didn't lead last year.
Healthcare
we thought they would. Remember, we thought they would, and they didn't.
Healthcare, I would say, still not quite in a bull market.
Healthcare looks better than anything else so far this year, and is making new 52-week highs. How's your ARC-G doing? That ain't doing anything.
XLV has gone straight sideways for over a year.
XLV is the best performing sector so far.
It's a sideways market. Is it not a trendless market?
For the last 2 years, yes.
Okay.
Now, since the new 52-week highs list peaked a month ago, they're the best performer.
When that breaks out and it's no longer a trendless market, but it's a trending market, I would lean on biotechs and medical devices. You could go buy UNH if you want. If you want to go,
I'm interested in how you're grouping biotechs and medical devices together.
Yeah, that's what you just said. That's what you just said.
Yeah, they weren't last year. Tech was the leader last year. I don't know if you heard.
When I look at each sector, I ask myself, what is the tech in this sector? And that's more or less the group that I like to focus on. There's a little bit of tech in each sector. You just have to find it.
Maybe someone should give them the memo, because last year tech was the best performing sector, and neither one of those did diddly squat.
Patience, my friend.
Yeah, I guess. I'm more of a trend follower than that.
Talk about it. Those charts look like what? They look like ARC. They look like the IPO index. They look like small cap growth. Right?
All right, last one before we bring in Eddie. Ready, Strazza? Slide 10.
Yeah. I don't know, man.
Talk to me.
I don't love it.
Are you not entertained?
Does crack look like this?
Crack is below overhead supply still.
I know. So are you? I don't know.
Next.
I don't know, man.
This is the S&P index.
Listen, some of them look great. Whether it's Sunoco or Marathon, you could find the winners and lean on those, and that would definitely be the strategy, and I'm all for that. So Sunoco, it is an MLP. Don't love that. And then what is it? MPC is another one. I think Canadian Natural Resources, CNQ. So there are definitely opportunities in certain individual components. At the index level, still messy. This one, my big question here is, why does this look so different than the other indexes?
That's what I want to know.
Yeah. I have
the weightings, I guess, right?
So I have energy, oil and gas refining and marketing here on an equal weight basis, and it actually looks similar. It looks very similar. It's above those, whatever it is, 2018 highs.
So let's go market cap wise. You got MPC, Marathon Petroleum. You got Phillips 66, which is basically the same size.
That's another
Phillips
clean
66.
breakout.
Valero coming in at number 3. Then you got Dino, HF Sinclair Corp, DINO.
Yep. CSAN, IEP.
A lot of these don't look. Half the ones you just said don't look that great. So
no, they all look good. MPC, yes.
No.
PSX, yes. VLO, yes. I'm just looking, are they above those 2018 highs? These are all
VVV.
That's Valvoline.
Yeah.
That one looks okay.
That one looks like the index.
PAR, PARR looks good.
Yeah.
They're not all breaking out to new highs. So
they're not all breaking out to new highs at all. Agreed.
Right. I don't know. That it's weird. Yeah. Why does this look so different than XLE? That's weird.
So okay, I guess the takeaway
because XLE, the names in XLE are not in this.
No,
that's the reason.
Clearly, yes.
What's an XLE is Chevron and Exxon is half of XLE. Right. Neither one of those stocks are in this index.
Right. Yeah.
So there's your answer.
And so I guess the takeaway is, if you are, if energy is the pond that you want to fish in, this is the place, right? I would say also the MLPs, right? So the midstream operators. I'm just looking back at 65-day returns, right? So the trailing 3 months, very bifurcated action here in energy. So this is interesting. Oil and gas refining and marketing is up 8.5% over the trailing quarter. Midstream up almost 7%. Solid, right? Solid returns for both of those groups. Oil and gas integrated, which is all your large multinationals, right? The big operators, Exxon, Chevron, Conoco, down 2.5%. E&Ps down 7.25%. Equipment and services down more than 11%. And then the drillers, the frackers, down 13.5%. So more than a 20% spread between the best and worst industry group within energy over the trailing quarter.
Stood out to me going through my review this weekend. Just wanted to throw that out there.
All right. We got Eddie Elfenbein here from Crossing Wall Street. Let's bring him on the show right now.
Do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Eddie in the house. What's up, my man?
Good morning. How are you?
I mean, you tell me. I mean, you do all your trades, right at the beginning of the year. Have you been busy?
I'm just here for I'm here for some hot oil and gas talk. That's what I'm about.
Did you buy any for the portfolio?
You had none there last year, right?
Not this year. No oil and gas.
When was the last time you had an oil and gas stock in the portfolio?
I don't think I've ever had one, but I'm not.
Stop it.
Wow.
Yeah.
Stop.
Wow.
But even before the ETF, when it was just the blog post?
Yeah, this is 19th year. Yeah, I don't think we've ever had one.
Wow.
Eddie, do you focus more on growth stocks? And I know some of them are not traditional growth stocks, whether it's like Fair Isaac Corporation, but you're looking for growth in whatever area it is. Is that?
I would say, yeah, mostly it's growth. I would say that's where I go to. I probably have a couple that could be called value.
So you nailed financials last year, and a tape where, at least at the sector level, financials weren't great. They went through a really rough first half of the year, rebounded a bit, but the names you were in were quite different. I was just talking to JC about looking for the tech or the growth in every sector. I feel like you kind of did that with these financial picks that you were in. You want to talk about some of them? I know we talked about them last time, but whether it's, what was the filing one, right? They do the investor communications.
Broadridge?
Broadridge, BR, right?
Hold on.
I mean,
First of all, can we give Eddie his flowers first before we get into all
great.
this?
I just
First
was.
of all, Eddie Elfenbein, portfolio manager at the Crossing Wall Street ETF CWS, brought to you by our friends at Advisor Shares. Shout out Noah, right? How close am I, Eddie? Pretty good?
Yeah, no, you're right.
So here we're looking at a long-term chart. Go back. You can go back. You can see Crossing Wall Street making new highs. Here you can see Eddie's fund just abusing the S&P 500. But I'd also like to add that, to be fair, Eddie's, what, 25 stocks, Eddie?
Yep.
25 stocks are equally weighted. So I think it's only fair to compare the S&P 500 on an equally weighted basis. And you know what you're going to find? You're going to find that Eddie is putting up twice the returns of the S&P 500 equally weighted index. So can we get a kudos? Kudos to Eddie. Shout out Eddie Elfenbine.
Thank you.
Give it up, y'all. Give
Thank
it up.
you.
Shout out Eddie. No, seriously.
No,
Awesome.
Sorry. And he's not paying me for this. This is true. You nailed it. So good for you. So I wanted to mention that so everybody understands the legend in the room, Eddie Elfenbine. Eddie was an OG when a lot of the OGs came on the scene. That's how OG Eddie is. Am I wrong?
Can we
No,
talk
you're
about
right.
let's talk about some of the big winners now.
Eddie had a blog when he used to have to like chisel it into like these like concrete, right?
This is
like-
our 19th buy list.
It was like Eddie, Barry Ritholtz, and Zero Hedge, and like that's it. That's all
Yeah.
it was.
All right, what were the best ones last year?
Let's see. I think FICO was a huge. It basically doubled. Trex also doubled. Huge year for them. Trying to think what other names. I know a little one, Miller Industries, that did very well. A lot of ones like, I think Stryker had a big year. I think Broadridge had a nice year last year.
Yep.
It's interesting. It's never the ones you think. It's always one it'll come out of left field and turn out to a huge winner each year.
What was the investing rationale or thesis behind Fair Isaac FICO when you got into it?
I mean, look, any company where the generic becomes the one that everybody uses. People say Kleenex, and people talk about a company's FICO score, even if it's not FICO. I mean, they're such a dominant player in that field.
Based on that logic, you must be buying Uber then this year.
I am not buying Uber this year.
Why do you laugh? Why is it so like not a stock that you would buy? What's the joke I'm missing here?
It's not nothing against it, but I just like to go for less of the what I like to look for sure things that I know are going to deliver solid gains. With Uber, I just can't exactly say that. I'm not in any way against the company. I'm not shorting the company, but just the kind of investing, I like to go with the very sure fat pitch right down the middle. I know with Stryker, I know exactly what I'm going to get.
It reminds me, Eddie, of when the NFL signed a contract with the Microsoft like tablet or whatever. The announcers on the football game would refer to them as iPads. Be like, here you can see Tom Brady holding the iPad. They're not even iPad, and Microsoft is paying a ton of money, and the announcers are still calling them iPads, which was I thought hilarious.
The market knows.
Yes, indeed.
Just watch how people behave.
Did you buy WD-40, speaking of which?
No, but I love it a lot, and I do write about it. And I wish I had, because it jumped, 15% just the other day on earnings.
Slide two.
Yeah.
I don't know. What is WD-40? A greaser? Is that what it is?
It's WD-40. I mean, it's people think it's don't realize it's its own company. It's a standalone company. It's not part of 3M. It's not part of some large multinational.
I feel like it should be part of 3M.
Take the chart back to 20, 30 years. It's been a huge winner, and also very few people follow the stock. Wonderful company.
I want to add that if anybody has problems with carpenter bees, you spray some WD-40 into their holes. See ya. No more carpenter bees. I'm telling you, it's a hack I learned on Twitter.
They had a list on their website of all the stuff that you can use WD-40. You know, you can use it to soften a baseball glove, to wearing a baseball glove.
I did not know that.
I had no idea all this stuff. I thought it's just, you know, fix something, a door that's creaking or something like that. But no. They need
$4 billion
duct
in
tape.
market cap almost.
How much?
$4 billion almost.
Wow. That's a good size.
Yeah. Who knew? Who knew? WD-40 headquartered, guess where? San Diego, of all places. Who knew? Another
cool stock that people don't know about is Nathan's Famous, the hot dog people, NATH. Yep. It's been a huge winner. I don't think anybody really follows it on Wall Street.
What is it?
Nathan's Famous, the hot dog place.
That's a stock?
Yes, it is. NATH.
Oh my.
See the knowledge I bring, you know.
NATH. This is a quote unquote restaurant from Jericho, New York. Shout out Long Island. It's 300 million, Eddie. We talk about real companies here. Come on now.
You knew it was from Long Island.
I thought it was from Brooklyn. I thought it was from Coney Island.
Yeah.
They're the Coney Island dog. Oh, yeah. Okay. Same difference.
Well, Long Island is technically the same island, but if you have someone from Brooklyn, if they're from Long Island, they're going to smack you.
Yeah, it's true.
Coney Island is in Brooklyn?
Yes.
Yeah.
Oh, no shit.
These kids from Connecticut, they don't even get out of their own state. You don't even know Coney Island's in Brooklyn? Come on. What is the matter with you, bro?
I don't think I've ever been.
Dude, Coney Island is awesome, like in a grimy kind of way, you know. You get drunk and ride roller coasters and play like games. No, the Brooklyn Cyclones, minor league baseball.
Sounds like Atlantic City.
No, fewer needles.
Okay.
Eddie, talk to me, Eddie. What are the big changes? What'd you kick out? Why'd you kick them out?
Yeah.
What'd you add?
I kicked out Trex just because it had such a monster year for us.
That's for to build decks, right?
Right. And I'd love to have it again. It's a great
company.
By the way, a lot of people say that they don't like the material, but I would say in like the last 5 years, the quality has really improved of Trex. Another one, a well-known stock that we kicked out was Danaher, and we did that. Also, it had its spin-off. So we actually had to kick out 6 stocks this year. Trying to think, what else did we? Steppen, which had a terrible year. They had several downgrades this year, lowering guidance like 3 times. Let's see, Middleby, and also Carrier Global. Those were the 6 sells we have, you know, including Veralto. And then
before Carrier.
Before Carrier was Middleby. They make the industrial kitchen stuff for any hotel, resort, or thing like that, where you need the big kitchen material. Can be a good company. What wasn't really thrilled with its performance last year. It did well. We actually owned it before and sold it, bought it back, but probably a mistake with that one. So it's tough admitting your mistakes.
But you're just listening to the market, right? Basically, almost using technicals. If it's underperforming, you don't overthink your fundamental thesis. You just say, okay,
yeah,
there's other names.
Yeah, I always think, you know, is it still the company that we originally recommended? And sometimes for some reason they become very different. Not always going to, you know, jettison something just because it's high. Trex is a good example of doing that. But, you know, look at like, you know, Steppen is a good example. Just, I don't like when a company continuously lowers its guidance. I got to trust the company more than that.
Right. Okay.
Do you only buy American companies?
No, I'll go anywhere to get a good company. I had for many years.
You go to China?
Software.
Yeah, Israel.
Yeah.
So Israel. What about China? Do you trust them?
No, not too much.
Yeah, no, wise choice. So no Chinese stocks ever in the Elfenbein 25?
I don't believe so. No.
I kind of like the sound of that a little better. You know, the Elfenbein 25. That's hot.
Mm-hmm.
These cyber stocks are so hot. Look at Checkpoint last week. My God.
What you add?
Did great.
What'd you add?
Oh, the 5 ad. Let me see. It was
Apple, Microsoft, Google.
yeah. Ready for one? You probably won't hear a lot of talk. Is American Waterworks, a largest water utility in
Wow.
the country. Great company. And I tell people who are new to investing, not every company has to be, colonizing Neptune. You can get just a good, solid utility. They have contracts with the U.S. government for several military installations. These are 50-year contracts. So I really like American Waterworks. Here's a cool company, Farmer Mac, which is does a lot of financing for rural America, the rural community. They get in the rates that they can borrow from are much lower, and they can provide financing on much better terms for so many farmers, agricultural businesses.
What's the ticker symbol for that?
It is AGM. And also, I don't think anybody follows it, or maybe one or two.
Federal Agricultural Mortgage.
That's it. Yes, better known as Farmer Mac.
For the farmers.
Yep.
I mean, Fannie Mae.
You're so in the know with your lingo, Eddie. You're so in
the know. Fannie Mae still trades over the counter.
It does exist, yeah, and in many ways they're similar. In fact, AGM owned a huge amount of Fannie Mae, and the stock at one point AGM went from 37 to 2. Now it's at 190. So just give you the idea what kind of movement you can see in this stock.
I remember a time when these companies, the Fannies, the Freddies, it's all anybody was talking about.
Eddie, do you have a market cap max?
No. I owned Microsoft a couple of years ago. Should have held on. Or I guess yeah, 10 trillion. I don't go above 10 trillion.
That's a good rule of thumb. Good rule of thumb. All right, what else you got?
Let me see. Else I got. Rollins, which is the owner of Orkin. That's what they call the pest control business, or just killing bugs. Great business. It's done hugely well over the past several years.
What's the ticker symbol?
ROL.
If you live where I do,
Rawlings. Yeah. Sorry. Yes.
You pay them every month,
yeah,
like $50-$60. I don't know what they do. I never see them. I don't even know if they're coming here. And then if, God forbid, you ever terminate the contract and start a new one, there's like a big starting fee. You pay like $300 up front just to start the contract, and then it's just subscription revenue. And you can't
pest control. Isn't it pest control?
Yeah.
Down
it's
here.
Orkin.
Orkin.
And it's the kind of thing, if people have bugs or even rats, they'll say, I don't care what I have to pay, just take care of it. And that's a great business to be at the other end of that.
How is it a consumer discretionary? Seems more like a staple, no?
I never know how they do that. I mean, I buy most of my staples from Amazon, and that's a discretionary. I don't know how that works.
Yeah, pot stocks should be a staple.
Well, that's advisor shares.
Right. Say shout out, Noah.
MSOS. So
I like it. Okay, so Rawlings, ROL, interesting. $20 billion market cap. So we're climbing up that ladder. What else?
How material is Orkin to their business? Is it mostly Orkin?
It is the business. I mean, it's Orkin under many. In fact, a number of years ago, they were a diversified conglomerate, and they gradually sold off everything but Orkin. So they are a pest control play.
Very cool.
If you want to get bugs, that's basically the stock to buy.
I love that. Okay, I might get involved.
A cool company is McGrath RentCore, and they make basically modular structures for businesses. So if you see some construction site out in the middle of nowhere, and they get all these pods out there, that's what McGrath does. It's basically PSA for businesses. Renting out, it's a great business to have. Really, really nice margins on that, and it's grown consistently for a number of years. So
Livermore, California. Don't drink the wine from there.
Eddie, how are you so knowledgeable? How are you so knowledgeable about the finer details of all of these rather obscure stocks? I would say, are you just sitting around listening to earnings calls, reading through 10Ks all day.
Hold on. Why are they obscure? Because they're not talking about them on basic cable?
I didn't even know Nathan's was publicly traded. I know a lot of these little restaurants are like Denny's, but I had no idea Nathan's was. WD-40 is another strange one. These are very undercovered companies. That's one theme about all of the names that he shares is the analyst community is not talking about them.
And why, Strazza? Why are they not talking about them?
They probably have great balance sheets.
They don't need the money.
More to it, yeah. But what are you doing to find out, all this information that you're sharing with us? Like, what's your process?
Well, basically, I have no life, and so I just, I read 10Ks. But I've been doing it for a long time, so I like to, pick up names that are, a little obscure. But I like to follow those that are unfollowed because that's where you're more likely to find bargains. People just don't know about it. And a lot of time, where does analyst coverage come from? It comes from going to an investment bank to float some bonds, float some stocks, do an M&A. Right. McGrath, they don't have to worry about all that. So they're not going to get the coverage back from them. And that's fine by me. I'd rather have the really cool one is Miller Industries, which is a tow truck company. And I mean, they said they're going to have a huge year. They did have a huge year. And the stock was up, 40, 50% for us. No coverage. They're based out near Chattanooga, Tennessee. Love that company.
Eddie, I have a question for you. When you talk about Wall Street not covering stocks, what do you think is it zero firms covering the stock? Is it one or two? Like how do you define no coverage? Is it zero?
I would say, for the most part, I would say less than two.
Less than two.
But there are
one or zero.
I would say, or I would say 0, 1, or 2. I would consider
0, 1, or 2. We should build a scan, Strazza. I like this. Fonz, you listening? We should build a scan, an undercovered list of stocks. I like this a lot. Above $1 billion. I'm not doing this 250 stuff like Eddie. You're crazy. You're wild man over here. $1 billion plus undercovered. I might even be willing to go to 700. We'll discuss in our meeting later.
We could do that in 5 minutes. That'll be interesting. That'll be fun.
Eddie's like, well, I spend my whole life doing this, so I'm glad you guys can do it in 5 minutes.
No, because I'm just saying that because we have that data, which is nice, of how many analysts cover these companies.
All right, Eddie, what else? Did we cover the 5 or we're missing one?
And then I think the last one was Amphenol, which makes the fiber optic connectors. Another one that was previously a stock we had that I stupidly got rid of it. It's APH.
And what is a fiber optic connector?
I don't know. I cannot go into the precise details, so I don't want to make a fool of myself. But I know the broad applications of these. The applications of these are very, very broad. It's a very strong business. One of these companies that there really aren't many other companies that do exactly what they do. And I believe that there's connectors across a broad range of spectrums, not just fiber optic.
60 billion. 60 billion.
Nice big company.
This one based in Wallingford, Connecticut. Shout out Connecticut. It pays one of those sweet spot dividend yields, like below 1%. So you could tell it's probably a grower.
Mm-hmm.
Not a shower.
It's a grower, not a shower. Those are the best dividend payers.
They love women's basketball in that part of the woods. Eddie, can you talk to me about
UConn's
before the fun police kicks you out? Can you talk to me about the one or two names that didn't quite make the list, like the bubble stocks that didn't make the dance?
Yeah, I could say WD-40. I was strongly considering it. So
why didn't you make the cut?
I think I just thought it was a little bit. I thought it was a little bit too expensive. I thought I could get
on a multi-valuation.
Yeah.
All right. And what else? What else got close?
We've had a couple questions.
CWS is the fund.
Yeah, we've
had. And also, I just crossed 100 million AUM.
Hey, now, come on, Eddie. And that, by the way, and that's not because new funds came in. That's because of capital appreciation, right, Eddie? You see, you earned that 100.
Mine go up.
What's that?
Congratulations, Eddie.
Oh,
Mine go up.
Mine go up.
All right, guys.
All right. Well, Eddie some new stocks to go out and buy. Thank you, Eddie.
No, these are good ideas, Eddie. This is good.
Fantastic.
Coming in hot with new names for his fund. CWS is the ticker on that one. We've had a few questions on the chat. check it out. Eddie runs one of the OG Wall Street blogs, and we always appreciate him coming on. So, Eddie, thanks a lot, man.
Thanks, guys.
Thanks,
Eddie,
Eddie.
you're the man. Keep it
All
up,
right.
buddy. Congrats. Dude, Eddie Elfenbine. Dude, Eddie Elfenbine. By the time the rest of us got blogs, Eddie had a blog for decades. Eddie was around, Eddie invented the game.
He's becoming one of my favorite guests. I just love his style, the simplicity. It's obviously a process like we talk about. He's been doing it for a very long time. It works. It's proven. It makes sense, right? It's intuitive. Some of these charts too.
So most importantly, it works.
I just wanted him to know that I did know that Nathan's was a public company.
I did not. I'm not afraid to say it. There's a lot of these little restaurants.
I would have bet my life it was based in Coney Island, but now that I think about it, there's not really a lot of office buildings in Coney Island. So.
No, there's not.
So I didn't think that through.
Also, just disclaimer for the chat. Let's all act our ages out here and stop asking about geopolitics. We're not
geopolitics.
We're not thinking about it. I don't know.
They asked about the caucus last night? Yeah, we don't care.
This
what
is
happened
not
last
the
night?
right show for you.
Whose caucus?
Iowa caucus.
Who won? Trump won. It was a big win for Trump. Was it any news there? Who came in second?
Who won? Ross Perot?
You want to know how I know Trump won? Because I come in this morning and DWAC is up 5-6%. Trump's
that's still around.
Still around. That's how I know.
He'll come back to Twitter, right? When he becomes president again, he'll obviously come back to Twitter.
I don't know, man.
It'd be a huge mistake not to, right?
I don't know. All right, 9:27. Hey, we got a couple earnings. Let's cover those real fast, and then I got some news as well. So let's do this. We'll start with Goldman Sachs here on the bottom line EPS beat, on the top line sales. Oh, that's a pretty handy beat. 11.3 billion versus 9.8 billion estimate on the sales. Pretty nice beat for them. As a reminder, you should definitely, if you're trading these banks today, you should definitely watch what they did on Friday. A lot of these moves are going to be priced in with JP Morgan, Bank of America, and Wells Fargo already reporting. So the Goldman numbers were good. The Morgan Stanley numbers were a little bit more mixed. I'm seeing, a miss on the GAAP EPS and a beat on the sales for them. On an adjusted basis, Morgan Stanley did beat, so I'm not quite sure how you want to parse that. But there you go. Bottom line, mostly good headlines for the banks this morning, but a lot of these moves are going to be priced in because the first three big ones are already reported on Friday. So,
stock's down, right? Was it such a great beat for Goldman Sachs?
No, and that's kind of the point I'm making is like JP Morgan leaked pretty much all day on Friday, right? Bank of America was flat. I mean, Wells Fargo was down, right? So the banks leaked on Friday in spite of their reports. So I would pay more attention to that than I would to the numbers themselves this morning. Sort of the point that I'm making there. But so yeah, the numbers are what they are, but sentiment leaning bearish on these this morning is what I'll say about the earnings. And so a couple other headlines on my radar. We have a few, couple that Steve will find interesting. One is, maybe you saw the comments from Elon Musk over the weekend about Tesla and AI. The comment that is going around is that he would be less willing to turn Tesla into like an AI company if he didn't own at least 25% of the voting shares in Tesla. Right now,
you think that's okay? You think that's okay, Strazza?
Do I think what's okay?
What Elon is doing, kind of, putting, I guess, the board in a predicament where they got to give him those voting rights. You think that's cool, or?
Yeah, it's his company.
He has the right to do it.
Private company too.
If people don't,
no.
I don't know. Tesla.
Oh, I thought you were talking about Twitter.
No.
Listen, all the other founder and CEOs have done similar things. Look at what Zuckerberg did with Meta, the Google guys, right, with the 2 share classes. Right. He's protecting himself. He has every right to do that.
Right now, Elon Musk owns about 13% of the voting shares. So he's basically saying, hey, double my stake, or I am going to be incentivized to take my AI ideas elsewhere.
Well, they could spin off this AI business, right?
In theory, they could do anything. Yeah, I mean, there's a lot of balls in the air here. We're still waiting for that Starlink IPO, right? I mean, there's a lot of things they could do.
Thank you. This guy is just, it is so just ridiculous what he has accomplished. They're saying SpaceX is going to come public at like almost $1 trillion valuation. That's insane.
Yeah,
that's crazy.
I don't know. Yeah, there's a lot of things happening with Elon as always, but
I don't know how they calculate this man's net worth, but I find it hard to believe that the unrealized, gains in his interest in SpaceX is included in that number. I don't know. This man is going to be so crazy rich.
I don't know.
Gonna be?
I mean, dude, it makes Warren Buffett
look. What
is
he now?
He's the richest man in the world. All right, a couple other headlines. Apple is abandoning the blood oxygen sensor on their smartwatches. This is to get around a patent ban. This is what they've been going back and forth with the U.S. Court of Appeals for a few months. So Apple Watch is going to get back in the good graces of U.S. courts, but no more blood oxygen sensor on them. Disney.
Are you getting should you guys order the thing?
Huh?
Do you guys order the thing?
Do we order the thing?
The Apple Vision Pro? No.
Yeah.
No.
Is it too late? I didn't order. I've been busy.
It's $2,500.
$2,500. That's cheaper than I thought. I heard $3,500.
Whatever.
Spencer's like, what's the difference? I'm not getting one anyway.
I'm not getting the Vision. No, I never got the Vision Quest or whatever the Meta's thing is. No, I never got that.
Can I play Grand Theft Auto on it?
You live near Miami. You can play in real life.
Hey now, he lives in Key West. First of all, very different than Miami.
I said near Miami. Yeah. All right.
In Miami, they got Jews and Cubans. In Key West, they don't have either.
Just Cubans.
There's a few of them. There's not many.
Okay. No, you guys are outnumbered these days. Hey, did I miss the banks?
Yeah, just for a second. I mean, there's not much to say about them. Like they leaked all day Friday. So
I want to say that. Throw up the. Let's start with Wells Fargo. Throw up the Wells Fargo.
Opt out.
So these are two banks that have already reported, and then you're going to have a slew of bank earnings just hitting the wire every day this week. Okay, I don't want to make the bet that Wells Fargo is failing, ugly fail on this base breakout in an environment where other banks and regionals are beating and reacting higher. Right? I really want to see this damage repaired if I'm someone who's bullish on these bank earnings, which I am. JP Morgan next. This is the leader. The report was great. It's always great. Kissed new all-time highs. And then next chart, the zoomed in one. That's how we ended, right? So I'm watching these charts extra close, just the next, few days, because again, other banks are going to come out and beat, and they want to see positive reactions. I would imagine the damage in Wells Fargo and JP Morgan, very short-term damage, I imagine it's being repaired. How'd I do?
All right. Well, yeah, we'll watch throughout the week. I mean, the big ones are going to be done today. Then it's all smaller banks from here on.
Tommy Tuberville is buying the banks into earnings.
I like how you call him Tuberville.
Tommy Tubes is buying the banks into their reports.
Why don't you show us?
What does he know? Tubes is at it again.
You have any other fun facts about the earnings or lack thereof, Spencer? Or can we get on to some filings?
I had a couple of headlines real fast. Disney is in talks, advanced talks with the NFL to take a stake in ESPN. Thought that was interesting. We don't know what kind of stake, but I'm assuming a sizable one. And then this is Disney and the NFL.
Disney's getting a stake in the NFL?
No. Disney is going to sell a stake in ESPN to the NFL. And then
smart. One, I like that.
Steve, this may interest you. 2 years after paying $1 billion for it, Uber is shutting down Drizzly.
Good.
I've never used it before.
What's a Drizzly?
So it's not the first time. It won't be the last. Uber is vigilant in shutting down business segments that are not working. They shut them down. They spin them off. They divested from their ride-hailing services in certain parts of Southeast Asia. They are trying to compete with the likes of Instacart with this booze delivery service. I don't think it's the business that they really want to be in, right? So they have the money because they're so beautiful from a cash flow basis, right? They have the money to make these bets, just like we talk about the mega cap growth companies, right? They can take these swings, and if they miss, it doesn't kill them, right? But that's how you get into the next big growth opportunity. So they're taking shots, and I think that's what they should be doing.
Yeah, Drizzly was not a delivery service in the sense of Instacart. It was like a back end that let liquor stores do their own delivery. So it's not quite the same as like.
If I want a 12-pack of beer or a bottle of champagne right now, I could press 2 buttons and have it at my door in 20 minutes.
Yeah, but that's Florida. There's no laws there. Other states, you can't do that.
Oh, really? Florida's so cool, man. Have you seen the new Hard Rock?
One way to look at it, I suppose.
Have you seen the new Hard Rock bet commercial? Oh, it's hilarious. I'll send it to you guys.
All right, let's do hot corner, and then we have Pat. Nice. So let's do hot corner first, and then
hot corner. So hot right now.
Okay,
Tommy Tuberville getting after it.
First, Tilray, make of this what you will. These guys have been selling their shares for the past 5 years now aggressively.
It's a piker purchase.
I mean, a couple of them got together and said, hey, we need people to talk about us actually buying stock for once. So they got the 3 most important officers at the company to all buy a very, very insignificant and immaterial amount of stock to them. And that's it. So now they're on our list. Don't love it. We see it all the time. Right?
Piker purchase.
Disgusting.
Right? It's just a tiny little nothing.
For what it's worth, there was a headline on Friday about the reclassification of cannabis. But
how come nobody seems to give a damn?
Oh. You notice how these headlines matter less and less?
There are 15 other ways I would rather play cannabis before Tilray. Okay, Tilray is probably the last. So
I just don't understand how they're not a consumer staple.
But why are you so obsessed with finding the right play, the right vehicle in the worst group? Why imagine if you spent
because hold on. I'll give
semiconductor stocks.
Listen,
imagine.
I'll give Spencer credit on this one. It might be the worst group of stocks currently, but I think what Spencer's implying is that if and when there's a time to be buying pot stocks, he thinks that there are better opportunities in other places over Tilray. How close am I, Spencer?
Yeah, you're pretty close. You're obsessed with showing the worst of the worst, and if you look around, it's not. Yes, it is all. It's all mostly bad, but it's not all as bad as Tilray, right? So
I think about these. What do you call the multi-state operator, whatever? I think about them in the same way I think about shitcoins. Like the question I mainly ask myself is like, how many of them disappear? Is it 80%, 90%, 95%? Are we left with like 1 or 2 eventually? And it's like Pepsi and Coke, right?
I mean, there's not that many to begin with,
right? But there's clearly too many.
Maybe. Anyway, what's up with the banks here? Tommy Tubbs?
Tubbs is loving the banks.
Yeah.
The banks, the tactical damage is really showing itself. Follow through today. We talked about these short-term continuations and key. I love this one. I've bought it 3 or 4 times. I keep scaling in. I was expecting an upside resolution from this little flag. Looks like I'll probably be getting stopped out of this trade just ahead of earnings, which I really don't want to do. So I'm going to have to think long and hard about this one when we get off the show today. But plenty of exposure to this today, and it's not looking good. I think they report on Wednesday or Thursday.
Yes.
I could just hold the calls and hope for a Hail Mary. Is that a strategy?
No. Tilray, for those keeping score at home, is down 99.36%.
Yes. Yes, I understand. Everybody understands this. This is why I don't even look at Tilray. You look at it more than me.
I look at it as a bellwether.
You look at it more than me.
Remember when Canopy Growth was a bellwether?
I don't look.
Hold on. If Tilray's market cap is over $1 billion now and it's down 90, what was the high market cap for this thing?
Oh, it's $300 per
Right.
share. Right. So do the math. I don't know. I'm not gonna do the math on that.
Well, they just because it was you can't just do the math, the reverse math on the market cap.
No, because
it had
these
a lot
guys
of
are raising
secondaries and stuff.
These guys are raising capital. Like
splits probably. There's probably maybe
I can tell you.
in there.
I'll get you the beats.
Some reverse splits along the way and whatnot.
Got to be at least one reverse split in there, surely.
Tell you right now.
Dude,
Yeah.
over 99%. Like if you're down over 99%, like wow.
All right.
Okay, Tilray at the peak, which was September of 2018, shortly after it came public, 20 billion was its peak market cap.
All right.
September of 18.
All right. I'm gonna bring on Super Pat Duno.
Bring them on.
Talk chart report.
Hey, now, Pat.
How we doing?
Oh, just
Bright and
looking at some
early.
pot stocks. Tilray's
You
down
know-
over 99% off its highs.
I saw that. I mean, it's just incredible. I remember when this thing ripped up to 300, as you guys were talking about. But I'm glad you guys are talking about pot stocks because I was just looking at MSOS. I dropped it in the chat there, but yeah. So what's interesting about it's definitely perked up, but it's really only the U.S. pot stocks because I think it's relating to decriminalization or whatever the legislative changes are, but it's really only U.S. stocks. If you look at MJ, which has mostly Canadian names, it's not nearly as strong.
I did not tell Pat to say that. He said that all on his own.
I actually kind of tuned in late. Were you guys talking a lot about it, or?
This is what I've been saying. Yes, Tilray is Canadian. I would never look to a Canadian cannabis company ever.
We started talking about it because the CEO started buying some, but it was a Piker purchase. I mean, just combined between the three of them, CEO, CFO, and global general counsel combined invested $148,000. Like really? Like really? $148,000? Like could you have invested less?
You know how that goes, right? They're all together. They say, we need a bullish headline. Let's all buy some stuff.
It's not it's bearish. Like you hate it that much? You can't
Right.
even fork over a
Right.
couple bucks, couple shekels?
I agree.
150 grand between the three of them? Get the fuck out of here.
Now let's go look at.
a slap in the face.
We could look up how much stock these guys have sold over the past 3 or 4 years. I'll bet you it's astronomical.
I bet you there's a lot more commas and zeros.
Yeah. So whatever.
All right.
It's uninvestable, and I'm tired of
Piker
talking about
purchase.
this group.
Okay. Again, enough the pot. Unless there's more. Pat, I don't think there is. But
Yeah.
But the MSOS ripping this morning.
And I'll say, I mean, over the last 6 months, it's up like 35% versus the S&P. I think like 9%, 10%. But when have we talked about pot stocks as an area of relative strength? And you look at any time frame
Been a
under
minute.
6 months. Yeah. You look at any time frame under 6 months and it's outperforming. So something going on.
Pat, you mentioned uranium in the Friday chart report. That was your chart of the day.
Oh, yeah.
We haven't talked about that for a second, but some heavy volume there in the global X uranium ETF. We've talked about CCJ,
Yeah.
but not about your.
I mean, it's trading at its highest level in almost a decade. Best week in a couple of years last week. Third best week ever, I think I saw. And a couple of them, like CCJ is a little extended. I think NXE is as well, but UEC, I mean, you can definitely find some decent ones in there.
They're all extended over the short term, but if you zoom way out on some of these bases, you don't really want to be thinking short term with chart patterns like these, right?
Yeah.
And these are major structural trend reversals. The bull market for uranium, I believe, is going to be a secular one. I think it started years ago, and there's probably a lot more to come. This is more like a buy them and stick them away, right? And let the cycle kind of play out type of a trade for me.
Yeah, because a lot of those, and Steve, you and I talk about it on Chart Request Live all the time. These giant bases, when they finally resolve, it can be really hard to kind of get into them. Your best bet is to just, like you said, get in them and just, put them away, just ride that trend.
They tend to be messy resolutions, full of false starts and fails, right? That could shake you out right at the moment when you want to be not getting shook out. So they're tougher patterns to trade. It's not like a short-term bull flag or a little continuation pattern, which tend to be pretty clean and quick, right? These massive bases, they're tough to get behind. But if you could do it right, zoom out, kind of, really exercise some good patience there, just follow your process. These are some of the best chart patterns that we could kind of find as long-term investors.
Yeah. Steve, I'm wondering what you think of the regional banks. I know you touched on it a little bit here, but it went from bull flag to kind of resolving in the way you didn't want to see it.
Yeah, I'm not thrilled. I'm losing a lot of money.
Yeah, those flags are not resolving higher.
Sucks.
Yeah, and you can see it in some of the indexes too, like the Dow Jones Industrial Average, for example.
I don't think it's good. I don't think it's good for the broader market. I don't think it's good for, this thesis of financial leadership here in 2024. Got to monitor it. I do think they could be set up for, some oopsie action, right? And some whipsaws higher, but that's got to happen like now, like today. Candles need to turn green. We'll see. There's another strategy there with something like Key Corp. Throw up the Key Corp chart, Fonz. Like with something like Key Corp, if you zoom in on the Key Corp, like the zoomed in one, you could still buy a retest of the base, right? So say this bull flag fails, right? It should send us right back to that 13 level, that base breakout level. That could be another entry. It's a different trade at that point, and there's a little bit of damage to the tactical trend. But already, last week, if you drew a trend line from those October lows last week, it was broken. Right? So you're seeing a change in character of what was a really beautiful up coil type of situation for the past few months. That has now changed. So how long does this corrective kind of phase, take? You have to find out.
Anything else jump out to you, Pat, that you want to highlight from the chart report or your weekly top 10?
What are they saying about stocks and bonds, Pat? Because these things keep moving together. Look today, stocks are under pressure, bonds are getting hit again.
Yeah, you've been all over that. They really have been moving together. But it seems like some of the riskiest things are moving. We saw Nat Gas this week or last week, pot stocks, uranium, Ethereum. We're kind of moving out on the risk spectrum, and we have been for a while, but we keep seeing these speculative areas kind of picking up again.
Natural gas down over 10% this morning.
Oh boy.
Wow. Didn't see that.
Crushed.
Yeah. Well, everything is down this morning pretty much. Not Nvidia.
Not copper.
Yeah. And or not the dollar.
Or
there you go.
Semiconductors.
Yeah, what a week for Ethereum though. That was the best week of outperformance since 2021.
Yeah.
Huge.
That was the big winner. When people ask, all right, so what's the big winner from Bitcoin getting its ETF? It was Ethereum. Particularly Ethereum relative to BTC. Hanging in there nice still. That ETH BTC ratio, wow. 25% in a couple of days and holding its gains. It's very impressive. Were a lot of people talking about it, Pat, you think, or no?
Oh, yeah. Yeah, it was just a huge move. And,
Ethereum absolute or Ethereum relative?
Mostly the relative. Yeah. Because it was such a noticeable difference.
Yeah.
Not only was it outperforming, one was going down and Ethereum was going up. So it's kind of hard to ignore that.
Agreed. 100%. Where can we get the chart report, Spencer?
Yeah, I should probably mention that. And same with the hot corner, guys. By the way, the links to the chart report and to the hot corner are both in the description of this video on YouTube. I'll throw them on the screen though, if you guys are interested in signing up. Chart report goes out for free every single day. There it is, thechartreport.com. Also, should mention this. We don't mention this enough on this show, but Pat has an added service that he provides to premium members only. We call it the Chart Report Private Access. He's doing some proprietary scans that only go out to his members. There's three scans, two scans plus a weekly report. Right. That's the rundown there. If you want to learn more about that, I'll throw that link up on there. There it is on the screen now. Nope. Where is it? There it is. Yeah. Sign up thechartreport.com/private-access. That is Pat's premium offering. Like I said, proprietary scans and the weekly top 10 report, which is my favorite thing. So, okay. On the hot corner as well, like I mentioned in the description, get that for free every single day. So that is what I have to say about that. 9:51. What should we
little recess? China making new lows. That's my recess. Eat Chinese food, sell Chinese stocks.
We can do
how about that for a New Year's pair trade right there, huh? Come on now.
Let me just look at my list. Did I have anything else on my list? I don't think I did. It was a pretty quiet, like Steve said, whoever said it for Steve said it was a quiet weekend for Bitcoin or crypto. Quiet weekend for news. Not much going on. So yeah, we can do some recess. What the heck, right?
Yeah, I think so.
All right. Where's my little recess video? There it is.
Elliot Dye in the chat. I can't tell you if you should keep key. That's not for me to say, right? I've told you all the levels. I've told you how I'm trading it, what I'm doing, but I'm not you. So
yeah, we don't give advice around here. We actually don't care what other people do with their money. That is not our problem. So good luck. Yeah, no, we listen, we want everybody to make money, but we don't actually care, right? We're interested in what we're doing. We're going to set our levels. We're going to be disciplined, and then you do what you need to do, you know?
Right. You can
want to see the crypto I've been buying.
What's in the box? I got cigars that may or may not be from Cuba.
There's still cigars.
JC, when are we going to work on your background? I've been meaning to do this for a long time.
I get a lot of compliments, as a matter of fact, on my background. How many compliments do you get on yours? I'm going to go with 0.
No, I'm definitely at least one.
Spencer's got a great background. I think I have the best easily, but Spencer.
Really JC, what's the story with is that Mike Tyson behind you?
It is Mike Tyson behind me. When I first moved into this office a few years ago, I was giving a presentation to a bunch of financial advisors, and so I put that up there to make fun of them, because you know how financial advisors always start their presentation like everybody has a plan until you get punched in the mouth, right? So I was just going to rip on them, and I did. And if people liked it so much, I just left it up there, and I was always intending on moving to a new office. I still am, by the way, Spencer. I just haven't yet. Okay. And Mike is still up there, right?
All right.
That's right.
Well,
I have what?
Nothing.
What?
Okay.
I want to give a shout out to the Greeks. Right? These Greeks.
Like alpha and beta and theta, like the options?
No. Like people from Greece.
Oh.
These Greeks really know how to make me happy. The seafood, the wine, the acetico, right? I mean, just everything's just so fresh. I like the lemon. Strazza's like anti-lemons. Like he's got like mental issues with lemons. He thinks that they're disgusting fruits.
They're dirty. They're just dirty.
I like how the Greeks do the lemon. Shout out to the Greeks. Acetico is what you want to drink from Santorini. Acetico.
All right. My recess is went to a second time in my life I did this. Yesterday went to a vegan restaurant with Jonathan in the chat out in New Hope, Pennsylvania. And I gotta say, it was okay. Like it wasn't terrible. It wasn't bad. It wasn't
New Hope
bad.
is cool.
What?
New Hope is cool.
I'm talking about the food. New Hope is great. Although I got a I got a parking ticket. That wasn't so great, but they are strict.
Well, you
about the
shouldn't have
meters.
broken any laws then if you didn't want a parking ticket.
I missed it by that much, but yeah, vegan restaurant, not horrible, not horrible. That's my review.
You know, it's funny because when you go to India, you know how like in America you go to a vegan restaurant and it says vegan or vegetarian on the outside. In India, when you walk around, it says non-veg. So it's the opposite. They tell you that they're not vegetarian, that they got you know, proteins and whatnot there.
Yeah,
no meat. You're not gonna find much meat there, but you'll find some chicken and fish, some non-veg. It's kind of funny.
And then my other recess is we are trying to sell a couch that we've had, and just a good reminder, and to anyone buying or selling anything on the internet, always keep your head on the swivel. We almost got scammed over the weekend, so always be mindful when you're on Facebook Marketplace or OfferUp or any of these other platforms or eBay, whatever. Just always keep your head on straight, because these scammers are quick. These scammers are quick, and if
keep
you
keep your smarts with you.
Yeah, keep your wits about you, because next thing you know, you gave away all your information, and you're like, ah, crap, right? So I know. So always be mindful. They're out there.
Costco. Speaking of couches, Costco sells love sacks now. You can go like.
What is a love sack?
Those couches
Are
are
These couches.
so obscenely expensive.
What is a love sack?
Costco's on board though.
Can you
I mean,
explain to me what a love sack is?
These new couches that you can move them around, like you can move the sections and make them different couches. They got like built-in speakers, cup holders, storage. It's like they're really decked out. They're fancy couches.
They're really
You make
expensive.
love on them? Why are they called love sacks?
Sure,
Hey,
if you
JC,
want, do whatever the hell you
JC,
want.
It's a public company.
Not in Costco though.
Love
You
sack?
got to buy it.
Yeah, LOVE, love.
This is the first time I hear of any.
Anyway. All right, I want to talk about parasites. So I ate a lot of seafood this weekend. We had the annual Key West Seafood Festival. Stone crab was good, not great. The shrimp was excellent. Yellowtail was good.
What was wrong with the stone crab? It's stone crab season.
Medium claws,
Oh,
maybe large. You really have to. So the more you eat stone crab, you learn that the reason why the large and colossal claws are so much more expensive than the medium claws is because they're literally like 10 times better. Like the medium claws, they're okay, but the colossal claws, it's like,
and they're easier to
thing.
eat.
They are, yeah.
There's more
Yeah.
meat.
They come right off. They crack right off. It's lovely. So anyway, throw up this picture. We're at a restaurant and we order oysters.
Oh my
And
god!
you know, we're with our couple friends, and she spits hers out. She said, "There's something in it." She spits it out.
Oh.
My buddy looks at his,
Oh.
you know, sticks the little fork in it, moves it. I swear to God, a pea crab walked out of his oyster and started walking on our table. So we're sitting there. He's a captain, big Marine guy. Never heard of this. I've never heard of this. I'm like, holy shit! You know, get the waitress, send this thing back. As it turns out, the chef comes over and explains to us that it's actually a delicacy. It's excellent luck. George Washington, one of his favorites. You could go read articles about these pea crabs. It's a very rare thing, and they're parasites that latch onto the oysters in the ocean, and it's a sign of an incredibly healthy oyster.
I was gonna
If the
say
oysters-
it's evidence how fresh it is. I was saying that was a good thing, but you took the words out of my mouth.
Totally. So some people would just pop them right in and eat them. This thing's moving. It's alive in your mouth. But basically, the way the science goes is for a parasite to latch on, the oyster's eating enough for itself and the parasite. It's a sign of like a perfectly healthy oyster. Some restaurants do try to remove them. Others don't. I'm sure they run into this kind of situation with us all the time where people like freak out because they knew exactly what to do. But I just thought that was so cool.
I'm good with
It's
it.
called a pea
I'll
crab.
eat it.
Oh, man.
Nikki brings up a great point about how or it wasn't Nikki, a stock market Mike says, but a lemon is dirty.
I love seafood. I love seafood, but you know what? I draw the line. This is where I draw the line.
Live crabs? No, that's fine. You're
It's
good.
not a crab. It's actually a parasite.
It looks like a crab.
You're not. You're
I
not
know.
helping. You're making it worse.
I know, it's crazy.
It's all good.
Dude, I just walked right out onto the table.
Wait, did
Oh
you
my
eat it? Wait,
goodness.
did you eat it?
We didn't eat it. We didn't eat it.
Oh my gosh.
I had baked oysters though, and I'm sure that they were baked in, and I ate those, so
Oh,
I wasn't like looking for them.
All
Pat, you got
good.
anything?
Just eat it. Just eat it and shut up. You're good.
That's oof.
It's
It's good enough
protein.
for George Washington. It's good enough for me.
Protein.
Pat,
George Washington had low standards. I don't know if you heard.
Pat, do you have a recess?
He was
or no?
down for whatever.
Only recess is congratulations to our friend Peter on passing his CMT exam. That's huge.
Hey.
Hey,
Congratulations. I have
Peter.
that.
CMT level 3. I like it. I like it.
all
Alfonso
right.
just is officially a charter holder as well, is he not?
Hey,
I think so.
I think he just got the old approval from the CMT
Oh,
Association.
congrats, Fonz.
Shout out
I didn't
Fonz.
know that.
Shout out Peter. I like it. I
All right.
like it.
All right. It's Tuesday. We got spaces at 11. We have Char Request Live at 1, and that's the deal. So thanks for watching, everyone. Thanks to Eddie Elfenbine for coming on. Thanks to Pat for waking up extra early to be with us. And thanks to all of you in the chat. Smash the like. It does help us on YouTube. Thank you very much. Go make some money. We'll see you later.
cheers.
Adios.
Bye,
Let him
guys.
dance.
I can't take no loss. I don't need no